Hello, I saw something recently that scared me a little bit, and I want you to be scared a little bit too. And that is something I saw in terms of, central banks playbooks. And I think there's a clear danger of herd mentality there. I think there's a danger of linear thinking, and I just want you to feel a little bit the same way. So what I saw was this chart, which was on the website Visual Capitalist, and this is essentially the playbook that the central banks have for easing, for accommodative policy. Of course, the opposite would be true for tightening or trying to slow down the economy. Now, this is the playbook for the COVID-19 crisis. This is the playbook for 9/11. This is the playbook for the global financial crisis. This is the playbook for normal times. This is the playbook for when an asteroid hits. This is the playbook. There is no other playbook. And every single central bank is using this same exact playbook. Now, if you look at this in terms of central bank providing liquidity support, every single central bank in every single country did this in response to COVID-19. There was nobody that didn't. In terms of rate cuts, most of them did. I think if you look at the European Union, given some of the negative rates there already, that they felt like maybe this wasn't a policy tool. But what I want to focus on is the concept of rates and how that affects the economy. But before I do that, what I did is I said, well, if we have herd mentality, what do we do to avoid that? And I said, how does this apply to the central banks? Number one is stop being on autopilot. Well, they clearly are on autopilot. Every single central bank has the exact same playbook, and that's it. They haven't changed it. Now, another thing you can do is you can make a conscious effort to form your own opinion. Again, this is the playbook, and people don't have differing opinions. And I would say that this playbook was developed by the current central bankers' predecessors, right? So think about Greenspan and others that developed a lot of these policies. And there is absolutely no willingness for any of these central bankers to stand out. I mean, I guarantee if they came up with a policy that was more effective and had fewer negative consequences, they would be afraid to implement them because they don't want to be the person standing out. And I think if you can take some of the Fed's mistakes in terms of super low interest rates directly contributing to the global financial crisis and the housing bubble, they are to blame for some of this, right? Keeping interest rates artificially low for too long after that crisis, waiting too long to raise rates. No one is willing to stand out. So again, let's think about interest rates here. So the conventional wisdom is that, like, if no matter where you are, no matter where interest rates are in here, I'm just kind of crudely drawing interest rates from 8% all the way down to -2%. That no matter where you are, if you lower rates, then that is a boost to the economy. And if you raise rates, that slows down the economy. And this goes on forever, right? So it keeps contracting the economy as you go up to 9 and 10 and 11 and 12% interest rates. And then, we saw 22% interest rates or whatever it was way back when. And as you get negative, as you go negative, -2, -3, -4, as you keep lowering, it keeps helping the economy. Now, I find that concept to be ludicrous. There is no possible way that when we get down to -50% interest rates, that is going to be a giant boost to the economy. That is complete and utter nonsense. Now, in all fairness, some central banks say, look, we don't want to go below zero, that it creates structural problems or whatever, or it's less effective. The Chairman Powell last month said that that's totally out of their, off the table for them. So maybe we have this situation where once we get to zero, there's really no real boost to the economy. Now, my question is, why is zero the magic number? And you know what? It is not the magic number. Zero is not the low that is it's just not. There's no possible way for that to be true. Now, others have said, look, is not directly linear. As we get lower and lower and lower, it becomes less and less effective. So here, kind of drawn a logarithmic chart to show as we get lower, it gets less and less and less effective. Now, here's the thing: is like we don't know where this magic inflection point is, right? So I'm going to argue that what we really have is, as we lower rates, it is a boost to the economy. But at some point, again, we don't know where this point is. It actually has tightening effects, right? It slows down the economy. Now, why would this be the case, right? So you think about demographics. You think about the people that as we lower rates, it hurts some people and it helps some people. So an aging population does a little bit better with as rates are a bit higher. They're savers. They're not going to be taking out loans for investments and mortgages and things like that. So these older retirees, they actually are better off when rates are a little bit higher. So this is just a for example. Now again, this inflection point, I don't know where it is, right? So it could be at 2, it could be at 3, it could be back at 1. I don't know where it is. And here's the thing. This is not a magic number. It's different for every country. It's different depending on what year it is, what's going on. So the thing we have to think about is, again, demographics is going to change based on demographics. So as the population gets older, this inflection point is going to get higher, and as the demographic, as the countries have lower and lower population age, this number is going to get lower. We don't know where it is. So again, what I want you to do is I want you to not just blindly accept the conventional wisdom, and just think about this for a little bit. The central banks are a little bit too herdy right now, okay, and they have been for a long time. I would love comments on this. I would love you to just think about this in a little bit different. Think about things in general a little bit differently. Here is just some food for thought. Thanks so much for listening.